Test 1 2 1 2. Ah. A sense of capital. Aloha, ladies and gents. Welcome back to a new episode of A Sense of Capital Insights Time. Your host of today, as always, is Julian, and I'm very glad to have you in, guys. As always, at the beginning, currently I'm checking if the sound quality, the audio quality is fine, because I want to give you the best experience I can offer. And it looks good. It looks good. So I can quickly disconnect my in-ear plugs and go on with you guys. Okay, so again, very welcome you to another new episode of Live Earnings. Your host of today is always Julian. Very glad to have you in. I think I already told this. It's already in my memory. Muscle memory is working, however, so I need to follow my regular approach. Guys, and what we will cover today are the Q2, the second quarter earnings results of SentinelOne, the cybersecurity company out of the US. But before we jump in, as always, a quick disclaimer that in the upcoming minutes it will not be financial advice, consultation whatsoever, and there is no guarantee for correctness of the provided data. And guys, for those of you who are loyal followers, loyal subscribers, loyal viewers, you will recognize that the circumstances where I'm recording the stream have changed. Why? Because I basically moved from one apartment to another one, back to my home area, not in Leipzig anymore, more located now next to Frankfurt am Main in Germany, a little bit more centered, let's say it like this, compared to Leipzig. However, I don't want to boring you with this kind of stuff. More important is to cover those results, but again, guys, take care that no financial advice, consultation, no correctness for the provided data. So make sure you do your own due diligence, you make your own investments decisions, and make sure you do your own research process and basically check and screen very carefully that all the data are correct, because I'm just a human and I'm doing sometimes mistakes. Yeah, it is how it is. Okay, guys, what is the company we will cover today? It's actually SentinelOne, and the purple power out of the US, which created a lot of powerful pain in the past, honestly, as an investor, at least for a lot of those who have been long. Those who have been short invested, I think it's a festival. It was a festival, but however. So guys, you can see here what they are doing. I mean, they have their legacy business, which is basically endpoint security. Major competitor here is CrowdStrike. And then we have, but as well, Microsoft or Palo Alto Network you can mention here. But then we have further types of security offerings like cloud security, competitors as well, like newer ones, Wiz, so very strong, growing type of solutions. Identity security, primary competitor for sure is Okta, I think. And then newer ones is data and AI. So really the stuff which today makes the big news, yeah. So that's SentinelOne. It's definitely a smaller one compared to the major primary competitor CrowdStrike. You can see we're talking about roughly $1 billion annual revenue and enterprise value of less than 5 billion. But I think it's not 100% up to date because the stock price was growing today already higher, and now after market, I can already spoil you here, is up again another 5%. So very strong 3 days. I think yesterday 4%, today 2.7%, and now another 5% at least so far. Guys, and I don't want to waste any time of you, so here you can see the results, and as always I copy and paste them into the Excel sheet I specifically prepared for you and for this earnings release event, what you can see here. So again, I hope I don't do any copy and paste errors and mistakes, but again, that's the reason why I always repeating myself to take care by yourself for checking the data, because again, I'm doing mistakes sometimes. However, let's jump in, and we start with top line and with bottom line growth as always. So top line revenue, and you can see here that is the actual revenue they have achieved. I mean, it's really slightly a beat, or actually it's not even a beat. It's more or less they just covered the expectations, the forecast of 242.2 million US dollars. They achieved tiny more, a little bit more, like 400,000 US dollars. So basically they covered the expectations. Actually not that bad, but actually not that surprising as well, because honestly I invested today a little bit more money into this company because I was really convinced that those results are good because of the actual revenue results, not because of outlook, corrections, adjustments or whatsoever, because the CEO mentioned already in the earnings call Q1 that the first month of Q2 looks very promising in terms of revenue and overall performance results, and so I was definitely convinced by this statement. That's the reason I invested more money. And to tell you the truth, I mean, that more small beat, or basically just coverage of the forecast, is not that strong. Yeah, I expected more like 243 million, or let's say 244 million, so a beat by roughly 2 million. Why? Because you can see here a year ago they as well, so let's say in Q2 2024 forecast compared to the actual results, they beat it by 1.6 million, and I want to see as a performance on a similar level, more or less. But that is not the case, as you can see here, almost no beat, and so that's not that nice. But what looks a little bit more surprising is, and that is of course quite juicy to see, because future is always a little bit more valuable in my perspective than the present, especially the near future. And you can see that the forecast for Q3 2025 looks a bit stronger than I expected. I expected roughly 255 million, and they announced a goal, a target of 256 million US dollars for Q3 2025. And you can see that's basically forecast to forecast almost 40 million more. And what I originally wanted to see is the same development between Q2 and Q3 2024, which was 12 million. Yeah, so it's 14 million instead of roughly 12 million. That is nice to see actually. And so yes, the actual results, the revenues, what they have achieved with 242 million, not convincing for me. But on the other hand, this forecast, the outlook for Q3 with 256 million looks like a kind of an re-acceleration of the revenue, even if it's not crazy a lot. I mean, look, when we calculate what this means in terms of year-on-year growth, it's roughly 22%. So not crazy much, but at least more than several competitors of SentinelOne, and that is nice to see. I mean, again, yes, the base of revenue is not that large compared to other vendors of cybersecurity products and services, but on the other hand, it is nice to see that the revenue growth is reaccelerating. That's worth a lot. So actual results negative, future outlook potential very positive. So I grant this one a neutral rating. Yeah, very confident neutral rating, I need to say. And that's good because really, I mean, I was invested 1 or 2 years ago, and now I'm invested again since a bit more than a year. And since I'm again reinvested into this company, I never experienced the positive earnings results. I'm not even sure if I experienced any neutral earnings results, what I rated as neutral. So starting with a neutral rating here is quite nice. And let's go on with the earnings per share. And here forecast was $3 per share. And I wanted to see $4 per share, and actually they nailed with $4 per share. I mean, more is more, but it's nice to see they stay in this positive region in terms of profit. And why I wanted to see this $0.04 per share is basically I wanted to see a beat on the same level like one year ago, the quarter. So Q2 2024, I mean, a neutral target was the target, and they achieved positive $1 per share. And this small beat I want to see here as well. That is what they have achieved. It's not completely surprising. Yes, it's more than the outlook, more than the forecast, what analysts expected. But for me, it's on point what I expected, and on point what I expected means again a neutral rating. And I have always high expectations, a bit higher I think than the market for my investments, because I always try to invest into the best stocks I can think about. And so if they achieve a neutral rating on top and bottom line, revenue and profit wise, I'm quite happy with it, honestly. And I think again, since I'm reinvested, it was never that great. So let's go on and check a bit the details of this company specific business. Regularly we have international revenue, and that's for me a very, very interesting number, honestly, because I love if SentinelOne making moves in foreign countries outside of the US, outside of the home market. For instance, in India, they, I think, very aggressively investing into the department locally, and that is what I like to see very, very much. And you can see, I mean, it's working out very well in the past. I mean, yes, the numbers are not raising like heavily, but you can see it was already at 35% in Q4 2023, and now last quarter it was the all-time high with 38%. That's great to see, and later in the call I'm quite sure they will mention a new number, so make sure you sharpen your ears and check out what they have to say. But unfortunately now no information in the press releases or in the presentation slide deck. Okay guys, let's go on. That is only released customers. The total customer count and revenue per customer is only announced one time in a year, at the full year press release, so at the end of the year, and that's currently obviously not the case. So that is what we skip as well. But we have a very delicious number here, and it is a 3, 6, 9, 10 digit number. When we talk about analyzed recurring revenue, I mean, that is the number for all of you who know that already. That's the number for ZES, for software as a services company. And basically what it is, what is already covered and signed under a contract or covered by contracts, yeah, with customers. So it's not counting now for this year, but if they would now stop selling their services and just keep the contracts which are active at the moment, they can calculate with 2026 annual revenue based on the annualized recurring revenue of $1 billion, which is amazing, of course. And we should not forget, there are further quarters, they will sign more deals, fixate more deals, and for sure the total revenue for 2026 will look larger. However, let's see what this means in terms of year-on-year development. As you know, I give always strong focus on year-on-year development. So we have here, oh, that's correct, Q4. So yeah, now it looks good. Here are the numbers, and so past quarter annual recurring revenue or annualized recurring revenue was growing by 24.4%, which was already quite strong, and now it's still 24.1%. I think it's very, very solid. Definitely above the revenue development, because you can see here this was roughly 22%. So you can see here this already upcoming reacceleration, and even though 24.1% is a bit lower than 24.4% compared to the past quarter, I grant this a positive rating, because again it's a reacceleration. That is nice to see. It's above the growth number, even if it's a light green color, let's say it like this. It is a positive rating for me. Yeah, that is really nice to see, and crossing this 10-digit number, definitely nice to see. Now we check out what is going on with the large customers, so the 100,000 US dollars plus annualized recurring revenue customers, and we can see here they crossed the 1,500 mark with 1,513. Let's see again what this means in year-on-year growth. And that is nice to see again as well. I mean, past quarter not heavily strong, but it's nice to see that even large customers adopting to their solutions. It doesn't only mean that that they make more money or whatsoever, or have very profitable deals. It really means as well that there's a lot of potential for that the customer has the buying power to adapt to further modules. So if they are endpoint protection, protection customer, maybe in the future they will go for AI Purple, they will go for other data solutions, they will go for cloud security, they will go for identity security solutions. All of this might be a chance for cross-selling and upselling, and these large customers have the power for it. And on top of it, it makes that it proves that the big customers, the big players are trusting SentinelOne, trusting their solutions. And if SentinelOne keeps on winning those agreements, they can use them as references for basically fixating further agreements with other larger customers. So that's a flywheel basically, and so that is very nice to see that these big customers coming in more and more. And don't forget, there are a lot of large players focused on these customers, like Microsoft, like Palo Alto Networks, like CrowdStrike. The competition is very, very heavy, no doubt. You can see this as well in the sales and marketing expenses, for instance. And it is great to see they're reaccelerating, and that is really strong from my perspective. A very strong sign. And that is definitely green as well. Never granted that much green to SentinelOne. I can't imagine that, or can't believe that that is actually really the case, what is going on here. Hopefully there is not too much downside coming, but I don't think so, at least as far as I can remember when I entered those numbers a few moments ago. So let's go on and take a focus on the profitability. Here we have the gross margin on a GAAP base. So really the true gross margin, or true profitability, if you want to state it like this. And you can see last quarter it developed up by 2%. Now it stays stable compared to Q2 2024. Oh, that's right. And so that means nothing is going on here, but you can see it is, it increased from 70% from Q2 2023 to 73 to 72%, 73, 75, 75, 75, 75, 75. So it is on a level where I think SentinelOne feels very comfortable, and from my perspective they have good reason to feel comfortable. So for me that is a neutral rating, even though it's not developing in a positive direction. Look, if they reach a certain ceiling and it's a positive environment, it's fine that they stay there and focus on other stuff. So 75% for me feels good. But let's check out what is going on with G&A, general administrative. So really administrative costs to run the company, manage the stuff, this kind of stuff. Accounting as well, for instance, and or even facility management, even this kind of stuff. And you can see it's at 21%, and there is a lot of room for improvement. CrowdStrike, I think they targeting something like 5 or 10% for G&A expenses. I'm not sure if it's on GAAP base or non-GAAP base, but I assume it's on GAAP base. However, there's definitely some room for improvement. And you can see past quarter, year on year, They went down by roughly 2%, now still down by 1%. Yes, it's lower, way lower than 1 year ago, way lower, as you can see here, compared to 32, 31, 27%. And almost the lowest, 20% in Q4 2024 was a bit lower. Yeah, but it stays stable, yeah. And that is what I don't like to see, honestly. That is what I don't like to see. I want to see that it's going more or less aggressively and constantly down. Excuse me. And that is not the case, what you can see here, so I rate this negative. So first negative rating, actually. But on a G&A profit level, not that bad. I mean, revenue, SentinelOne for me is a more or less revenue growth investment. Even if I like to see that it's getting more and more profitable. But I'm not in a hurry as an investor in this regard. Let's see what is going on with this very aggressive aspect, and that is the sales and marketing expenses. Again, very competitive sector. CrowdStrike is crazy. I mean, SaaS is already crazy, but CrowdStrike is on another cybersecurity is on another level. And let's see what is going on here. I mean, past quarter they decreased by 3.5% year on year, and now on minus 7.2%, and that is actually very nice to see. Very nice to see. Very nice to see. I mean, it was before 58%, and now it's 53%. So that's a very strong one, honestly, and that definitely balances out the G&A expenses. But look, guys, for me, most important is that G&A goes down, because I think it's okay to invest a bit into sales and marketing, even if it's not like classic investment, but somehow you achieve reputation, you achieve some moat, you differentiate yourself to your competitors. And for me, it's absolutely fine if this kind of not getting decreased that heavily quickly, but this jump from 58 to 53% is a very strong one, very strong one. And I mean, in general, it is kind of a sign and indication that they're getting more confident in terms of competition. Yeah, they're getting stronger. They don't need to spend that heavily anymore on it, and that is nice to see. And that's as well, if that is the case, that's actually a very good sign. And let's go on, and that is for sure investment, because it's research and development expenses. And let's see what is happening here. So past quarter it already went up with 0.6%. Now it went up with another 0.7%. So you can see it was higher with 36%. It was higher in the past, no doubt about it. But it's re-accelerating, and that is not nice to see, guys. It was past quarter, for instance, 32%. Now it's 43%. And in general, yes, it is on this kind of level, and it's investment to the future, but still I want to see it's going slowly and constantly down. It doesn't have to do these jumps of 5%, but like 1%, 2% would be amazing. But it's going, instead of this, it's going up 1%. So that's for me straight negative rating. But however, I mean, when we see the bottom line is operating expenses share on the GAAP base of revenue, you can see, I mean, past quarter it went down by 4.7%. So really the promises by Thomas Weingarten, the CEO, and his team to getting more and more profitable. And of course that is what the market wants to see, that they achieve this improvements. You can see they're doing this. Yeah, it's accelerating actually. Last quarter by 4.7% year on year, and now by 7.3% down. So definitely the lowest one compared to Q2 2023. It was 134%. Crazy, and 107% is really low compared to the past quarters before. So really bottom line here in terms of profitability, even though if the subcategories are not that positive, really impressive is the sales and marketing expenses, how they went down. And not sure if it's just was one season or it was a general seasonality effect. But great to see this, and overall operating expenses definitely a record with 107%, getting closer to the magic 100% number, and achieving kind of operating expensive gap profitability, which would be amazing. Okay guys, now we come to 2 KPIs which I created by myself, and you need to take care when you use them by yourself or when you listen now to what I tell you, because again it's just a rough indication, but it's definitely not a very scientific number. But what I want to have is something like, okay, what they need to spend, or how much do they spend to keep their customers, to retain those large 100,000 US dollar customers, and what are the costs to acquire new 100,000 plus US dollar customers. So for retaining, I use the general administrative costs plus 50% of research and development. Obviously it's not 100% accurate, but at least it gives an indication, especially when I compare it to the other quarters, which I always calculated with the same. And let's check out what is going on here. I mean, past quarter it decreased by minus 5% roughly, now by minus 2%. Yeah, and you can see, I mean, it was definitely higher, but it was already lower as well. And not sure if it's seasonality or whatsoever, but it seems like to keeping the big customers, the expenses increase a bit. Yeah, but it's at least it's a bit lower. At least it's a bit lower than 1 year ago. Difficult one. Look, I rated neutral. Neutral to negative. Neutral to negative is the rating, but I leave a neutral rating. I think it's fair, because yes, it's higher than Q1 2025, but on the other hand, it's definitely lower, or at least a bit lower than Q2 2024, so the quarter 1 year ago. And that is as well for me important, that they achieve some progress here. Hi Jack Benton 27, very nice to have you in, collega. And yeah, congratulations that you purchased 700 more stocks or shares today. That is definitely a good move. I'm completely on the same side. I didn't announce it because I didn't have any time today because of a lot of work. But I invested another, how much is it? Like, let's say 3,000 US dollars. And this means it's like 200 shares. I purchased 200 shares. Oh man, you purchased more than 3 times the amount of the volume of me. Crazy, man. Congratulations. Very, very tough. Very, very nice move, man. You deserve all the success you have, man. Very nice. And I think, honestly, but I will add a little bit more information later to it. I think that might be really the start to a small rally and to more promising stuff for the next 2 or 3 months till the next earnings release. So I think the timing is very good from your side, and I did it as well. So of course I think too that it was a good move. Yeah, a very adequate move. Let's go on with the acquisition expenses per new 100,000 ARR customers. And here I used sales and marketing expenses, 100% of it, plus 50% of research and development. So really, again, very rough usage of the existing data material. And you can see past quarter actually, because of the very low number of new 100,000 US dollars ARR customers, was really, really low. I mean, you can check it out. It was like, you can see here, it was only 48 up, and now it's up like 41, 51, 54. So definitely a stronger move, definitely a stronger move. However, because of this low number of new customers from Q1 to Q2 2020, from Q4 2024 to Q1 2025, the result or the impact was that, and connected to the high expenses, that the expenses per this acquired new big customers went up by roughly 47%, and now it went up year on year, went down on year by 18%. That is really nice to see. Very lovely, honestly, guys. Again, it's a crazy number, so take care of yourself how you use it. Look, for instance, not sure what is going on here. I'm not sure if you can see it. Wait. Very, very low number. Might be the case. Oh no. Yeah, that's definitely nonsense, because I mark it red. But that's not that important right now, because at the end we're not referring to this number in the calculation. However, you can see the spend was definitely higher and definitely lower in the past, but it's again de-accelerating compared to Q2 2024. And I mean, I think Q2 and Q3, stated by the management in the past earnings call, are very cost intensive quarters. So that's the reason why the number was that high here, and that's the reason why it's still quite high. But again, it's lower, way lower than 1 year ago, so that is definitely positive for me. Clear one. Now let's check out what is going on with really the bottom line, so net income margin. And we can see here, past quarter it went down by 53%, crazy, but it was the case. And now it went up by 5%. So you can see, I mean, it is, if SentinelOne is used to negative net income margin, but it was never lower than the one which was released today, actually. Yeah, almost that low was Q4 2024 with minus 31%. Now it's minus 30%. So the lowest number ever, and it is getting lower. That is nice to see. Again, positive for me. Again, positive. I can live with this very well. And I mean, it's not, this company is not Nvidia, this is not Palantir, that is not this crazy high flyer movement companies where you always expect crazy peaks and crazy beats, and you are used to it. That's not the case for SentinelOne. Yeah, I mean, SentinelOne is, in my perspective, quite fairly priced. I assume this will change now over the next weeks. Price will get up, that is my expectation at least. However, really hitting here in the right direction is all you can ask for at the end, and that is what they're doing. And let's check out what is with the free cash flow margin. You know, free cash flow is not that easy to affect as management, as accounting and financial specialists, so that tells a bit more the true story. And past quarter it went up by 2%, and now it developed more or less not at all, actually. Yeah, so you can see free cash flow margin was minus 3% a year ago, and now it's again minus 3%. So that's obviously not nice to see, and therefore I need to leave here a negative rating. It is how it is, but overall a neutral one, let's say like this. That's completely okay. And now we check out what is going on with the shareholder orientation, and how much the management taking care of us and diluting the shares we are owning, like Jack Banton's 27 and I. And you can see it's on 31% of revenue, which is crazy high from my perspective. For me, always when I see this number, I think it's definitely too high, even for the stage right now where SentinelOne is located at. But yeah, it is how it is. I see it's part of the business. And you can see past quarter it went down by 7%, year on year now by another 2%. But it's not really accelerating. It goes this positive development, let's say like this, it decreases a bit. And yes, I mean 31% compared to the past quarters before, it's not crazy high, but you can see it was already 31% and it was already 30%. So it's definitely re-accelerating compared to past quarter. That is what I don't like to see. That's for me a no-go. Yeah, maybe yes, there is some seasonality existing. Yeah, but come on, it's definitely not that nice. Let me think about it, because it's smaller and is better than 1 year ago at least. Maybe I can still grant a neutral rating. No. I really want to see it getting lower. I really want to see it, because I really have the feeling that it's very high, and I think as soon as they can really reach profitability and still grow their revenue or their ARR on a reasonable level, and can lower the stock-based compensation on as well a reasonable level, that the net income margin on a GAAP base is positive. As soon that is the case, I think SentinelOne can really hit high stock price marks. But again, for this, one requirement is definitely stock-based compensation share must go down. And yeah, that is what is not the case at the moment, at least compared to the Q1 2025 result. Jake Ben 27, you mentioned good job. Wish you luck and everything good in your life, G. Thank you so much. I can only give you, or likewise give you, these wishes back. So far it works well. I mean, some additional effort and work is required for this new apartment to take care, or this time it's kind of a house, so definitely more square meters, more space to live, a garden, this kind of stuff. So definitely improvement for girlfriend, for dog, for me, and some other positive aspects, at least from my perspective. But yeah, it's a bit more work at the moment, at the beginning, but hopefully the outcome, like a good investment, will as well be higher. But thank you very much for this kind greetings, let's say like this. Let's check out what is going on with the full year guidance. And that was actually more or less my favorite part, because I hated it so much that they decreased the full year revenue outlook past quarter, even though it was, I think, just something like 2 million or so. I really hated it. And so you can see here, before Q1, it was a bit more like $1 billion in expected revenue for this year. Then after the Q1 and before this results, basically, it was below 1 billion, and I wanted to see they crush this $1 billion mark. Really, I want to see it. I mean, I'm not a child or whatsoever, and it will never be about 1 million more or less, but I want to see this gesture, this sign, this message that they crush it. They are now as well 1 billion revenue producing or achieving company, and I think that's really a strong message that they can tickle this box for some of the investors out there. And yeah, now they are back on track, because they re-accelerated it, really, but about a tiny number, by $1.5 million, but they did. And that's really a nice sign. I mean, it comes perfectly in hand with the, for me at least, higher than expected revenue outlook for Q3 this year. So both of this looks very strong from my perspective, and that is, even though it's just 1.5 million, the message behind counts a lot, and it looks like economy is going a bit better. Jack Benton, thank you very much for those kind words. Really appreciate, I can say, and hopefully you appreciate what you see here. However, so this revenue, again, it's not just about this 1.5 million, it's really about the message. I hated it so much. You can check out my stream from 3 months ago. I hated it very much that they decreased the full year target. And now I love it even more that they come back to the original target with 1 billion annual revenue. That is nice to see. And because it was readjusted in this quarter, in the second quarter, and Q3 is already running, I assume they will make it happen. There's really a high chance that this will take place. And you can see then we're talking about full year revenue growth of 21.7, or let's say 22%. Yes, way lower than the year ago, but I think still reasonable. Maybe higher than some of the competitors, or for sure higher than some of the competitors, but we will see how everything will work out. But it's okay. I really want to see the two here in front, so I want to see 20+% year-on-year growth, and with this 21.7% expected revenue growth, I can live very well with. Now we take a look at the gross margin, operating margin on a non-GAAP base, and actually both has been decreased. Yeah. So you can see it was untouched, remained untouched with 79% gross margin and 3.5% operating margin, and now it is slightly smaller, but it is smaller with 0.2%, and the same with operating margin. Still positive. I think that is very important. That is really essential. We don't want to see that it turns negative. But now the target is 3%, and before it was 3.5%. So again, for me, revenue growth is always more important than profitability growth, at least in this case. Hi Mohammed, highly appreciate you as well, and very welcome you to the stream, and highly appreciate that, or like to hear that you can work with the information I try to support or provide. You're very welcome. You're very welcome, Mohammed. Very welcome, man. Cheers. And yes, so that's definitely negative. Again, it always depends why you are invested in a more or less revenue growth company like SentinelOne. I want to see as well sooner or later profitability, because the market wants to see it. But I personally can stay long time invested at SentinelOne without seeing any profitability. As long as it's not going crazy into a negative direction, let's say like this. But that's not the case. I think really they make this nice moves. You can see it here again with this operating expenses. You can see it with the net income margin gap developing, with a lot of stuff here as well. With my own KPIs, not sure how good they are or not, but compared to the quarters before, at least it looks solid. And yeah, not nice to see, but is okay. And overall full year guidance, I would love to grant it positive rating, because again, revenue is more essential for me than profit in case of SentinelOne. But if you have 2 times red and 1 time green, more or less for me the blended result, the mixed result, is then a neutral rating, and that is fine. And then what I have more is here something like they mentioned, I think in Q1 they have activated or it was confirmed and approved $200 million repurchase program. Nothing what I am cheering too much about, because at the end they have this crazy stock-based compensation, yeah. And basically, yes, they're buying back shares because they think they are cheap, might be the case, but at the end they're providing it very, very quickly. You can see it here, 74 million was spent in stock-based compensation just in 1 quarter, back to the staff, yeah, to their employees. And so it's not that reasonable. I've seen, I think, in the press release, in the sheets, that they bought back something like 53 million, I think, in Q2 2025. So they're using it, if I'm not mistaken, but again, not changing anything, yeah, not changing anything. So we can ignore this. And however, let's go through it. And for me, it was so far a very fruitful screening of the results. I mean, after this one, after granting now a verdict in a moment, I will check out what are the first market reactions, and I will check out the current stock price after market. and but I'm not concerned or worried about the price. I'm very confident for it still. I mean, I know it was 5% half an hour ago or an hour ago, and will not change that much negatively, for sure not, I think, because numbers are very solid, and SentinelOne is famous, at least for me, to be not that reliable in achieving targets. So yeah, I think that is already enough for this current stock price and for the situation in the market. However, we have revenue and earnings per share growth, so top and bottom line, that counts always for me the most, and I rate it neutral, and that's okay. Again, I have high expectations, and they covered it. Especially I like to see this revenue reacceleration expressed by the forecast, which is very solid with 40 million up, 1.4, and earnings per share is developing on a positive level and going up as well. That is nice to see. Who knows? I mean, I think some people might think that, for instance, CrowdStrike, the bigger competitor, the big one, the big player, the big eagle in the sector, not the biggest one, but one of the largest one. I think some investors might think that profitability is a bit lacking in terms of CrowdStrike, and who knows, maybe SentinelOne is not a crazy revenue growth company people always hope for, but maybe it's one which is growing on a solid base, on a quite long-term base as well, on a long horizon, and simultaneously making money, and maybe getting, even because of AI and whatsoever, getting quicker profitable than even other players. Yeah, because I mean, they have, I think, you can see it here, 14,000 customers. So there are definitely some customers existing, and there has a lot of potential to roll out more modules, doing this up and cross-selling, especially cross-selling. And I can't wait to see that this hits in. But so far, top and bottom line looks very well, very solid this quarter. And I mean, major, most important numbers of all this company or business specific details is at the end for me ARR and $100,000 ARR customers. And both of this is positive. Both of this is re-accelerating or growing on a very strong scale. Nice to see. It looks like they're really digging a good fundament, a good foundation for next year's results. That is nice to see. Gross margin solid. This year is positive. The expenses, this is more or less neutral to positive. Nice to see. Profitability base and free cash flow. Yeah, not crazy compelling, but it's okay. Stock-based compensation, I always like to see it's getting lower, even though it's not for me the most crucial number. Not the case, but it's okay. Full year guidance, I love to see this readjustment of the revenue scale. So all of this, if we rate this, is neutral with a green touch, which is quite strong, but more or less neutral. We have here neutral, and so overall it makes it really, really easy for me to leave a neutral rating, which again is very positive based on my experience with SentinelOne, based I think on the market's experience with SentinelOne. I think they give the right signs for future developments and create a new level of let's say hope and potential in the room. And if they can keep this now for one or another quarter and really cross the $1 billion revenue mark till the end of the year and achieving and producing more positive news, I really think this can hit in crazy. Can hit now, not crazy. What means crazy, guys? I need to stay serious. But compared how they kind of disappointed their investors in the past quarters, now they can really show and prove what they are able to manage and to achieve. Jack Benton, you're writing solid quarter from SentinelOne. Revenue grew 30% year on year to 225 million, beating estimates. Adjusted earnings per share 30%, 225. I'm not sure if that's correct. I don't think so, but the EPS is correct. Net loss narrowed to top line growth. Yeah, that's correct with the 70 million. That's right. With AI-driven cybersecurity gaining traction, the outlook looks very promising. Yeah, 100%. I'm sharing your opinion. And now other companies like Palo Alto, like CrowdStrike, they really pushing on this AI button, at least in terms of sales and marketing. But the truth is, really SentinelOne from the get-go played this card and played it very well. They have a triple-digit year-on-year growth in terms of data, in terms of AI. I think the revenue, the deal size of an AI covered cybersecurity deal, I mean someone purchasing, for instance, endpoint protection, but on top of it they order Purple AI. I think the deal size is on average something like 25% up. So really, I mean, they understand their business, and it seems like the customer base understanding AI, and that's right place, right time. Yeah, they just need to do their homework right and not even over deliver heavily. They just need to keep this solid momentum. This achievements, this what they have done here. Again, it's a neutral result. It's not crazy like hitting me from this chair, you know. Knocks me out. It's not like crazy positive or whatsoever. It's very solid, and this is what they missed to achieve in the past quarters. And if they are back on this path, on this track, that's enough. That's really more than enough, and it will make happen that I think valuation gets closer to CrowdStrike's ones, for instance. Maybe not on this level, but it's getting close, and I can imagine that CrowdStrike goes a bit down. Jack Benton, you will leave. Thank you very much for joining. Much love back to Czech Republic. Ahoy. Is ahoy or is Slovakia? I'm not sure what you said hello in this country. Ahoy in Czech Republic or Slovakia. I was professionally, business-wise, I was active there 3-4 years ago, I think. But multiple countries I was active, so it's not like I stayed there a lot of time. But I was there a few times, 2, 3, 4 times. Lovely country. Lovely people, good food. So greetings back, sleep well, and looking forward to talk. Yeah, ahoy! Like the pirates in Germany, at least. German pirates say ahoy. Yeah, in German language, like Jack Sparrow, you know. However, sleep well, and looking forward that you join the next calls. Yeah, guys. Now I check what is going on with the market reaction in terms of price, and in terms of comments on Seeking Alpha, and then I will go through the presentation slide deck, and then we are done. So I think 15 minutes more is realistic. Mohammed Kollega, hi from Kuwait. Unfortunately, I'm not sure what they're saying. I expect it's not ahoy. So you could tell me what people in Kuwait, how they greet each other. Always good to improve my knowledge, even though I likely will forget it anyhow. I'm very bad in this kind of stuff. Okay, guys, let's go on. Let's check what is going on with the aftermarket price. Oh, that's juicy. That is juicy, really. I mean, I talked about investing even more into SentinelOne, and actually I purchased for roughly $4,000 Grab, because I'm very convinced as well in Grab, even though my stack is already very strong and large, and I don't think Grab is cheap, honestly, but I'm just simply convinced in Indonesia, in Southeast Asia, the money I had left. Maybe I should spend more to SentinelOne, but still happy that I, in general, repurchased additional shares today, and my position is very strong already, considering that I sometimes have my doubts with the management of SentinelOne, honestly, but nice to see this 9% up. That's juicy. Woo! Mohammed, they say Hala. Hala, easy. Ahoy and Hala. Guys, it's like Kuwait and Czech Republic. Close to each other. That sounds almost similar in my mind. I think I can remember this. I try to memorize it. Mohammed, if I forget it, please don't take it personally. But try to remember for next time. Okay, so guys, let's check out How the audience on Seeking Alpha reacted, I can always recommend to join Seeking Alpha. I have as well, I'm a normal user here and pay monthly or annually for it. It's very well invested money for me, at least, because to see how other people think about, no matter if it's analysts or regular users like me, about news and analyst ratings and whatever, earnings results, for instance, always nice to see. So can definitely recommend you this too. So let's check out what Alpha Sierra Investing is mentioning. Giving the low expectations, I thought they were able to beat revenue growth 22% and margin of minus 33% are just not adding up. Yeah, and he gets 3 likes, and I understand this, but this is as well when you just scratch the surface from my perspective. Again, we digged really a bit deeper, we checked out other numbers, and yes, you can talk about revenue, but in the SaaS business, from my perspective, and it's a little bit more future orientated, ARR, annualized recurring revenue, is more relevant, and that is developing good and reaccelerating. Same with the big customers, that are very solid numbers as well. Annual revenue was adjusted up, yes, by just 1.5 million, but it was adjusted upwards. So that's worth more than this actual revenue, which is okay with 22%. Yeah. Let's say what others tell, it's status quo. Their full year revenue will be 1 billion and operating income will come around minus 330 million. The most important metric is how many large enterprises they can win and how their product is perceived, not concerned with gap loss of this kind of company. True, I share this. So the other one is writing, the growth is coming from customers with ARR of over $100,000. So usually growth that can boost future NRR figures. So net recurring revenue, basically. Operating margins are improving each quarter, and stock-based compensation, that's SBC, is reducing over time. The results seem decent to me. Yeah, sharing this obviously. Again, I told you that cross-selling, upselling, these large customers have the buying power, and if they start to utilizing them, and I think they started with it, and AI and data is a perfect match, might be very strong. And I mean, they purchased a new company, forget how what the name of it is, but it is something like data security, I think. I think it's not a big one, not a big deal. I can't imagine that this is, I cannot imagine that this is a big one. But on the other hand, I know it as well from the company I'm active for, how we talk internally about data security and how we can share this kind of files, and can we use internally a search engine for a SharePoint folder, so for our database basically. And all of this is existing nowadays. And it's nice that they have here something existing in the future. And yeah, basically ticking this box as well. Okay, let's say what Francis R. is writing. This is what a young company that is ramping looks like. Profitability takes time, and they have been transparent about this. R&D, so research and development, and sales cost money. True. Exposing value. Francis is writing, how are they a young company ramping up? CrowdStrike's revenue growth is higher from a much bigger base. SentinelOne needs to get its act together soon, or sell the core, or risk becoming obsolete and being sold for pennies and dollars in the future. Just my personal view, and I don't want to get personal with this person here, but really that sounds for me like a pure short seller. Yeah. Again, guys, look, consider here I have added different kind of established cybersecurity companies, and here what you can see is the price-sales ratio. And yes, CrowdStrike is working on a way higher sales base. I mean, they're talking about 4.5 billion or something like this. Yeah, and again, SentinelOne is aiming for the 1 billion. Yeah, that's the truth. But look at the price-sales ratio. CrowdStrike is, and yes, maybe CrowdStrike is valuated very high, yeah, with 24 price to sales ratio. But again, SentinelOne is on 6, maybe on 7 right now after the, or 7, 6.5 after the stock has raised in the past minutes. But it's still really, compared to Checkpoint, yes, is a quite profitable and established player, but it's not growing close on the level of SentinelOne. Yeah, and you need to set this in ratio from my perspective. You can't just say, look, always pick your cherries if you or the false fruits if you like to stay like this. Yeah, like here this company is better, why SentinelOne? Here this other company is better in this regard, why SentinelOne is bad this KPI. That is, I think, not the right approach for having a neutral rating. However, Nicodemus is writing numbers are slightly positive, a small beat and raise better than on the other way around. Yeah, true, but I don't think, again, it's about the small beat and raise about the current targets. It's more about the future outlook. Christoph Z is writing solid. Stock Scanner is writing reliable losses. Yeah, currently it's the case. Sets Alpha is writing going back to 20 plus pretty soon. Yeah, I'm sharing this opinion. Definitely. I mean, I need a certain level of diversification. I can't invest that heavily more, but I think as long as the overall macroeconomic situation is solid and stable, I think now SentinelOne has a really solid base to develop in the right direction. And KG222 is writing, y'all still going to hold, not too worried on continued losses. Okay, I already mentioned it a few times. So it's a very mixed impression what I have here based on Seeking Alpha and the users. I mean, I anyway have my opinion about it, but yeah, it's very regular. Even at other companies like Himson-Hurst, which is growing heavily like weed since quarters, and I make a good chunk of money. And a big reason why my Sentinel position is now like more than $40,000 is because of I made this money with Himson-Hurst, and at Himson-Hurst a lot of users did and still behave very critical in terms of Himson-Hurst. I understand it. It's a growth company. It's not established. A lot of regulations, political impact takes place, and expanding to new markets. But however, as if a company is making moves and achieving good targets, you need to appreciate it. It is how it is. Yeah, and even smaller companies can have amazing management. Yeah, and I'm not sure how actually this is the case at SentinelOne. Really, that's a big question mark for me at SentinelOne. But I know that that you should appreciate if achievements getting made. Mohammed, what you're writing? I am cybersecurity consultant and now the market almost selling millions in SentinelOne, Okta, Fortinet, Palo Alto Network, CrowdStrike and more. Sentinel is amazing, easy to manage solution. I love it and long. It's 1 year back. Yeah, I love to hear this, colleague. I mean, crazy insights, Mohammed. I hope you stay solid and reliable as a viewer of the stream, so we can grow together into the stock and make a fortune and have a lot of fun and joy on the way. That would be amazing and nice to hear this. And actually, I did a lot of Reddit research and research on the side of this about really users or people who have this function like you in a company and who needs to purchase cybersecurity solutions for the company they're active for. And it's not always clear that SentinelOne is better than CrowdStrike or CrowdStrike is better than SentinelOne and all of this. It really depends on the case, on the size of the company, on your experience as a company, of your target, all of this, of your budget, of course. Yeah, CrowdStrike is definitely more expensive than SentinelOne, as far as I know at least. So here as well, there's some potential for SentinelOne to getting more aggressive in terms of their pricing and achieving higher margins. So as well, a good fundament. But yeah, it definitely basically confirms your statement, Mohammed, that SentinelOne is working well. It's not a bad solution, let's say it like this. What you mentioned, stock rotation started today. Both cybersecurity and software will receive most of it. Many stocks also still cheap compared to chips and Mac 7. Yeah, true. I mean, Before, I mean, the former rotation wasn't that long and that heavily, like, but now it seems really like Nvidia, good results. Other companies like Snowflake, I think, achieved solid results. Even CrowdStrike, Zscaler, all of them, Palo Alto Networks, they talking quite promising about the outlooks. And I think even though some of these players are already evaluated quite high from my perspective, this rotation takes place, and I assume as well that SentinelOne will participate. Okay, last step for today is to go through the earnings presentation deck, which was not always provided by the Investors Relation Department, but nowadays it is, and therefore, of course, we're utilizing it and go through it. Let's start. And I will not spend hours now on this. I'm getting tired as well, and I assume you as well, and we need to just enjoy now the green stock price right now, the stock price development, but let's go through it. Crossed $1 billion ARR, nice, that is nice, of course, 22%, we have it. SentinelOne Flex, Agility and Simplicity. I'm not sure what this is, but I read as well from CrowdStrike that they have a Flex model. I forgot it a bit, but I assume that the customers have a little bit more room to adjust the deals with SentinelOne even after 1, 2, 3 years, maybe in both directions, not just adding up always with new modules customers purchasing from, for instance, SentinelOne, but yeah, being more flexible in all directions. Mohamed, maybe you have more information about this. However, yes, we have here this 24% ARR growth. Oh, there's another one. I will add this. It's nice to see. So it's actually ARR is not 1 billion, but 1 billion and 1 million. It's not game-changing aspect, but now it's 0.1% more annual ARR growth, at least. Okay, sorry, let's go back. Emerging products, quarterly bookings, that's nice to see. So it seems like they are diversified. Again, CrowdStrike doing a lot of stuff through their endpoint protection solutions. I need to check it. I think I made a note that really a high share of CrowdStrike, like more than 50% is endpoint protection, the legacy business, and yes, it's very good business, but the market getting more and more saturated, it's getting more and more dry. I mean, still there's some potential, but it's nice to see that 50% of, again, AI and data, this kind of stuff, is growing strongly for SentinelOne. Okay, that is what we checked. Wait, Mohammed, you're writing something. 1,100,000 is for size of deals. Yes. True. And it's nice. All of this is nice. Top tick growth margin. Okay, we covered this. Customer growth. We covered this. We see it here. So they go for more modules, the customers, and that is meant by this platform adoption, basically. I mean, the funny thing is that SentinelOne always criticized, and Thomas Weingartner, the CEO, always criticized that CrowdStrike is selling modules but not cybersecurity. SentinelOne is selling good solutions. That is the focus on, and now SentinelOne is well shifted on this modular base. And so basically, what CrowdStrike is doing now with setting a focus on AI, which was more branded by SentinelOne. Now, in the past, SentinelOne set now the focus more on platform access and selling modules, what originally was born by CrowdStrike, or developed by CrowdStrike. Data, yeah, okay, we have this 50% of credit books for emerging products, data, AI, cloud, and others. Nice to see. So CNAP, CNAPP. AI security leadership, platforms ordering through announced acquisition. Prompt, prompt was it. AI runtime security for visibility, confidence, and control over generative AI. Yeah, and again, as I mentioned, I know it from first hand that this is an aspect in terms of security, of being confident to work with AI internally. There are so much new options and possibilities. A lot of people today working with AI, and I mean, you should not upload all your legal documents, your contracts, your agreements, or whatsoever through OpenAI or whatsoever, and letting it, or Notebook LM or whatever, which kind of AI perplexity you are working with, publicly available one. But people are doing this. That's the truth. And I think, if I not understand it wrong, completely wrong, prompt security can add some cover to it, that especially employees of a company are a little bit more aware of what they are doing with the data of the company. Parallel AI growing triple digits with record high attach rates. Nice. So still triple digits. Here. Transaction overview. We have it. Challenges, secure adoption of general AI across large. Opinion, secure leakage, yeah, and intelligent items. Yeah. Yes, that is what I tried to explain. They definitely use wiser and more appropriate words. Gain visibility and control, ensure safe and responsible AI adoption. Yeah, okay. Employees, they use it more secure. Developers. Yeah, I think it fits very well. I'm not sure. I can imagine that really a lot of companies, a lot of startups are existing in this space. And I assume prompt security was not the only choice SentinelOne was going for in this regard. Yeah, you can see it here. They're stating it here actually. But you can see that if that's correct, prompt security seems to be positioned very, very well, and they really picked the cherry out of the other companies. And I assume they will bed it very well into their existing fundament. Mohammed, you're writing something? We use this to express big enterprise interest to adopt the solutions. Yeah. In terms of the 100,000 size customer deals. Yes. I mean, it's perfect. It's perfect, man. It's really, it looks, compare this to, this is the Q1 sheet, yeah? I mean, from the design, it looks quite similar, but from the content, that's a very different vibe to 1 quarter ago, from my perspective. We have it here. SentinelOne Flex at a glance, because I didn't know what they mean with it, even though CrowdStrike, I think, have the same right now. Change secure adoption. Here. Optimize spend. Dynamically adjust usage each quarter. Eliminate waste and align spend with real world needs. Yeah, it seems like security. Okay, here I think that explains it very well. Streamlined procurement and adoption. One agreement covers the entire platform, enabling seamless adoption and reallocation across platform solutions. So really, like this, it seems like it goes a big away back from the SaaS, because more flexibility, and SaaS means more this constant income sources, from my perspective at least. But it's really this pure modular system, let's say it like this, yeah. And which really, I assume the big advantage is nowadays, if you are a customer, or let's say on the old base, you really would think a lot of time to go for Purple AI or whatsoever, because very likely it takes a lot of time. till you establish it and implement it into your company, in your department, cybersecurity department, and setup. But now with this kind of adaptable, adjustable SentinelOne Flex approach, I think it makes it a bit more easier that new customers getting or are open to go for new solutions, because they know, okay, if it's nonsense, if it's not adding really value, they can go back. At least it sounds for me like this, and that is nice to see if that's the case. Okay, that's nothing special. That was already existing. This here shows a little bit the platform. I mean, of course, the SentinelOne in-house solutions, but as well but as well that they can, with the platform, they can integrate all kind of external third-party solutions like CrowdStrike and Microsoft for endpoint, or Wiz for cloud security, identity, email, network, data. All of this can get integrated into AI. And yeah, basically they try to make the competitors to their friends in terms of selling their own solutions. You can see it here as well. A total addressable market, that's not new as well. That is not new as well. They just show how this ecosystem exists, so they can sell to the federal agencies like governments, insurers, OEMs, distributors, all of this existing. Trusted industry, okay, that's crazy as well. FedRAMP high authorized, so for endpoint AI, SIM, Purple AI, cloud, and hyper automation. Let's see if they can make good deals with the government. Let's see. Maybe it's not the US at the end, maybe they will even make the first deal somewhere else, but I think this obviously FED is the US qualification status, not for Taiwan or whatsoever. That shows the results. This is not new. The business value of Purple AI is almost okay. Key results, some kind of survey or study. That's good results if it's true. 60% reduced likelihood of major security event. Nice to see. Likelihood. Faster remediate security threat. Yeah, I mean, if that's really the case, it's crazy beneficial. And if they are in the lead, if SentinelOne is better, providing better solutions here compared to the others, for instance, like CrowdStrike, that's definitely strong. Yeah, and here the famous Gartner Magic Quadrant for endpoint protection. It's just endpoint protection. That is what you need to take care. But I checked it very carefully, and for me it looks like SentinelOne getting closer and closer to CrowdStrike, especially in terms of their ability to execute. Yeah, but as well others, I think like Trend Micro and Palo Alto Networks as well, improving good. However, it's not like, it doesn't seem for me like that CrowdStrike and Microsoft are that different, at least in terms of endpoint protection. That's similar, but it's about cloud security, and it looks good in terms of SentinelOne. You can see it here again, endpoint protection from another vendor of this kind of ratings, and SentinelOne is here in the lead, so it looks solid. But most important here, good workplace for the employees. Most important is not this here. I really just wanted to check out what is going on with with the platform adoption, and this here is Q1, and I want to see if we can compare it to each other, and we can see already some development is going on. So we have here 40% free plus solutions categories, 40% free, nothing has changed. 3 times customer growth of this 3 plus solution categories. That's the same here as well. We have 20% enterprise customers with 4 solutions categories, and here it's as well 4, and everything else the same on the scale. I mean, look, it's not coincidence, it's not by accident that you can see here on the left these big customers of 100,000 plus ARR, and connected to this potential, what they want to show here and demonstrate, that there's a lot of room for improvement. If you compare this to CrowdStrike, I think CrowdStrike, let me check this if I have write it down somewhere. Yeah, CrowdStrike is 70% with 5 solutions or more. 70% with 5 solutions, and SentinelOne is, if you compare it to this, 20% with 4 solutions. Yeah, so definitely some room for improvement, for sure. Nice to see, but it didn't move that crazy to past quarter, honestly. That is what we already covered, and you can see quite impressive, at least on a non-gap base. Again, I always take higher focus on gap base, but it is how it is. Yeah, and looks solid. Let's check one more time the price. And I think that's up to date, 8.3%. That is nice, that is strong, that is how I think we all can sleep very well today. And guys, I mean, that's it for today. I'm very happy with the results because it was the last earnings release for the season. I mean, I'm only invested in 4 or 5 companies nowadays, in 4, so there are not that many earnings which I cover, but very happy that I can cover this because of people like Jack Benton 27 who joined, of Mohammed from Kuwait, Hala Kollega who joined. That is definitely always a plus, is this correct? A pleasure for sure to experience this kind of stuff from people all over the world. I don't need thousands of followers and viewers. For me, quality counts more, and if I have a handful of people from different countries who bring in their opinions, their energy, I like this very much, appreciate this heavily, and that was the case today. So thank you very much for this. And yeah, if you like what you have seen, please feel for sure free to like the stream and to subscribe to the channel. You can follow me as well on Instagram. A Sense of Capital is the same name like I'm titled here. So feel free to join. I always share more or less on time when I sell or purchase new shares, new companies, do my monthly updates. Maybe in the future I'm getting a little bit more active, but first of all, the dust needs to settle here in the new apartment, in the new house. Yes. So guys, thank you very much for joining. Thank you very much for participating at this earnings season. And I'm very heavily looking forward in 3 months that you join again. I think it will start again with Grab or with Hims and Hers. Very interesting companies. Feel free to send me a DM if you are interested in further information exchange. However, as always, last words, more important than any financial success, in my opinion, is staying healthy and have a good social environment. So take care of your beloved ones, take care of yourself, and hopefully see you next time, latest in 3 months. All the best. Cheers and bye-bye. A sense of capital.